is that you can go into something and you can conquer it if you just put the time and effort in. And I think that's the bottom line, is that you don't have to have a crazy IQ, or you don't have to have parents that gave you $10 million.
Hey guys, welcome to the Daily Crypto. We are experiencing one of the most significant bear markets in history, the worst in 45 years, where stocks and bonds markets have lost over 60% of their GDP in the United States. Is it all doom and gloom from here, or are we witnessing the most significant time of our lives as investors and traders? Keep watching to find out as we answer these questions with the Chief Financial Officer of InTheMoneyStocks.com, Gareth Soloway. Soloway is definitely one of the most successful traders in today's market, but it definitely wasn't always like this. How did Soloway handle the mistakes he made early in his trading career?
If trading doesn't work for me, I'm just going to go work at like Walmart or McDonald's. That's it. It's like over for me, you know? It wasn't option. Failure was not an option. I was going to keep going. And at that point, I was at a point where I was almost a profitable trader anyways. So it was just a matter of learning. Can I learn from what I just did there? And I'll tell you, easy way to learn. Number one, and this is what I do to this very day, when I find a level that I like in a stock, number one, using the technicals. Number two, I never go in with a large position to start, because the markets are unpredictable. Fear and greed are ruling the market. So what I'll do is I say, okay, what's my full amount that I would commit? And by the way, that full amount was what I bought the first entry on that stock. But instead I say, what's my full amount that I will commit, and I will not go higher than that. And I'm going to do like a 1/6 position. So I take, let's say, $100,000, divide it into 6 equal increments, and then that first entry, I only put 1/6 in. Now what that does is it limits your upside if you're right. If you're dead on, it limits your upside.
Yeah.
But that's fine, because in trading, the most important thing you can do is limit your downside. Always play defensively. That makes you make more money.
Understanding psychology, and chart reading. On discipline, he advises traders to have a daily structured routine, positive thinking, study time, reflection, and personal analysis. How does he abide by this?
Yeah, so number one, the discipline is an understated part of trading, but it is the most important. Because again, like you said, if you can't abide by a stop, or if you can't abide by kind of segregating amounts that you're putting in investments, then you're going to ultimately get in a situation. You might make 3 or 4 good trades in a row, but if that 5th one is horrendous and you just keep throwing money at it, like I experienced, it's going to wipe out all your gains and then some of the losses. And you find yourself even before your step 1, right? So one of the things to do is discipline doesn't just start in trading. People think out there that you can just walk into your trading room, right, with a couple computer screens and be like, all right, I'm going to be a disciplined trader today. No, you have to be disciplined in life, right? It starts at home. It starts with other things you do. So think about this. How do you wake up in the morning? Do you have a routine that you follow? Let's say some people will go to the gym religiously and say, okay, every day at this time I'm going to go get a workout in. Or some people will say, I'm going to meditate for a certain amount of time. There's a discipline that starts at home that you have to carry over. So I'm not a big believer that someone that just is all over the place in their regular life being able to get right into trading and say, oh, I'm going to be disciplined now, right?
Soloway also thinks that positive thinking is also important. He continues.
Your errors, you can't let them get you down, but you also have to look in the mirror, and you don't have to look in the mirror, but I think you look in the mirror and you repeat things like, I will not make that mistake that I did yesterday.
Right.
I'm better than this, things like that. And then let's be clear, study time. Education is by far the most important thing. If I could go back and if I had education to follow when I was a new investor or trader,
right,
I would literally I would have so many more millions than I do now that it's not even close, because I just made so many mistakes because I didn't learn first. I basically made the market charge me a educational fee,
yeah,
and that is always going to be more than if you learn from good quality people.
True. They say you either learn from your mistakes or you learn from the mistakes of others. And thankfully, we have Gareth Soloway ready to teach.
You don't have to be a high IQ person. I certainly am not. I like to think I'm just in the midst. Maybe I'm low. I don't know. But the point is that you can go into something and you can conquer it if you just put the time and effort in. And I think that's the bottom line, is that you don't have to have a crazy IQ, or you don't have to have parents that gave you $10 million. And
would Soloway have traded differently with $10 million than the $10,000 he started with? Soloway had $100K of fake money. Would he have traded it differently if it was real money?
Absolutely, absolutely. One of my principles is that it's a marathon. Investing is a marathon where the people that do it the right way, you don't double your account overnight or in a month, but you will be so much richer than people that are trying to hit a home run right away. Remember, I don't know if you're a baseball fan, but for those baseball fans out there, you have people that are flashy that hit home runs in baseball all the time. They swing for the fences, and then you have the people that are singles and doubles hitters. The best traders are the singles and doubles hitters. They get to the Hall of Fame. The problem with the home run hitters is that they strike out. And you can't, in trading, you can't strike out a lot.
Going back to position size, one of the principles of asset management is that your risk tolerance goes down the more money you manage. Of course, it depends on the client too. Does that principle apply to traders as well?
Yes, as a trader, you absolutely. So one of the things I tell the traders that I work with is that we all have to abide by our risk tolerance levels. So someone that's in their 60s or 70s that's trading with me, they have to obviously think differently than someone who maybe is in their 20s that has a bunch of money that they're just kind of learning with. Each person has to stay within their own zone, because one of the biggest things to fight, and this goes into kind of some of the same type of thing like discipline and psychology, is we all have to fight emotion. Emotion is what is the undoing of an investor or trader. It basically makes them buy Bitcoin at $68,000, and it makes them panic and sell sub 20,000 when maybe that's not the time to do it, right? So you have to look at that discipline, and the way you control discipline is to limit your position size. Like, let me ask you a question. If you had $1 in Bitcoin, and it was going down 80%, would you really care that much?
It's just $1, it really won't matter.
Right, but if you put $1 million and that was all your money in Bitcoin, are you going to be like checking the price of Bitcoin every single second? Yeah, you are.
Right.
And so you have to find that groove where it's just under the place where you're going to have an emotional response. Because emotion, as a trader, you need to be robotic. You need to have no emotion. You're basing your decisions. You have a thesis for trading that is on A, B, and C. And as long as those hold true, then you're in the trade, no matter if it goes up or down a little bit.
Gareth's guidelines read as follows. Emotion is a trader's downfall. Be a robot. What exactly does he mean?
So it's exactly that, is that the best traders in the world are the ones that have no emotion whatsoever. All they're doing is looking at facts on a chart, double bottoms, double tops, pivot points, trend lines, and they're just making their decisions based on that. So what you'll often find is that when an asset is running higher and higher, you get a lot of people jumping on board, aka Bitcoin again, in 2021 in November and October. And you have to say, I am a robot. Looking at that chart, is it extended? Is it overbought? Yes, it is. Are people calling out for $1 million price targets a little bit on the insane side right now when you come down to an asset, just of any asset? And then also just look at the hype out there. And the hype was ridiculous. You have to be a robot and say, okay, I see a double top from the April high, even though it pierced, it never confirmed. All these signals were telling us, including institutional unloading right there. I mean, it was a classic institutional signal of selling pressure. And you have to say, all right, no hype for me. I'm going to do what the chart says. I'm a robot. I react to what I see in the chart only.
It's so true that emotions are fleeting, but we feel the pain of, for instance, the bear market. So in the midst of the panic, what do we do? Soloway says step back, whether physically or emotionally.
I think you have to be able to start to look at yourself and have that introspective look at yourself and say, okay, yes, I'm feeling fear or I'm feeling greed, but now let me step back and say, okay, what is the chart telling me? What are these factors that I'm seeing in the chart telling me? And that'll ground you. It really does bring you back to earth. In fact, I had someone recently that said, when Bitcoin was trading below 19,000, they were getting close to exiting and just throwing in the towel. And then they remembered what I had said and what I had taught them. And they said, you know what, I stepped back And then all of a sudden, before I knew it, Bitcoin had rallied back up. And thank
Yeah.
goodness I didn't react to my emotion.
Right.
So it's that ability to look at yourself and to start thinking more robotically. And by the way, emotion's great in life, right? And love and empathy, sympathy. I mean, those are all great times to have emotion. Just in trading, it will inevitably work against you. And I'm telling you, there are bots, there are algorithms that the institutions have that know max pain levels on both sides of the market. And they will push the market to that level, knowing that if we can get Bitcoin or Apple above this level, we'll get a bunch of people to either jump long, or if it's down to the downside, we'll get them to exit the trade, and then we'll just whip it back the other way. I mean, it's used against investors. They have to get control of their emotion.
How does he analyze risk versus reward?
Let's say you're at support, but so you want to buy, right? We want to buy support, we want to sell resistance. If I look at the chart and I'm saying, well, it's at support, and if it bounces 50 cents, it's going to slam into the 200 moving average. If it breaks this level, there's no support until $5 down. So you have to, as a trader, say, okay, well, even if the trade is an 80% success rate trade, so 8 out of 10 times I'm going to win it, is it still worth it to make 50 cents when I could lose 10 times that and lose $5? So there's always this kind of analysis where there'll be some times where it's a great setup and the risk reward will be only subpar, and I'll just say, you know what, not worth my time. And the one thing traders and investors need to understand is that there is always another trade. So people, you know, beginning investors or these retail investors, they always feel like they always have to be in trades. They need that adrenaline rush. By the way, that adrenaline rush is emotion, and you don't want that. But there's always another trade. I've never been in a situation where I'm like, oh, I didn't take that trade, and there was never another trade. I guess that was it. Sorry, I'm done trading. You know, like, there's always going to be more trades for you to take. So be patient, trade less, makes more. Another huge concept that I try to get across to people is that when I was starting out as a trader, I would day trade like 20 times a day.
Right.
And I would generally lose, and the commissions would just stack up, and I would end up costing myself 500 in commissions. Back in the day, commissions were more. But as soon as I started to trade like 2 or 3 times a day, I made way more money.
Soloway confirms that he scalps too, but also points out that he does not want to be in a stressful situation, because that is where emotion takes over. Instead, he remains strict on the criteria he looks for, which is on the average just 2 day trades that might be done in 3 or 2 minutes, making tons of money. Thanks for watching this video. Are you looking to improve your trading skills? Drop your comments in the comment section below. Don't forget to like, share, and subscribe to our YouTube channel. See you on the next one. Until then, bye.